Greetings, members one and all of the Salivation Nation. Silver is back. Let's explore. I never knew silver went away in the first place. But according to this bullish article from Seeking Alpha, silver is back. In other words, it's primed for a new bull market. A massive new bull market is what they're saying. But they really don't give us a whole lot of information to back that up. But let's explore this article and see exactly what they're talking about, because I think there's some good information here, though I wouldn't necessarily draw the same conclusion. Even though, yes, I am bullish on silver, but I'm bullish in a more even-keeled way, I will say. Let's go through it. It's getting harder with every passing day to find cheap assets. Stocks, bonds, real estate, they're all pretty pricey, and yet no one seems to care. Instead, the masses, the asset managers, appear determined to keep pushing them higher. In recent days, the S&P 500, the Dow 30, and the Nasdaq all set new records, and yet it's not difficult to imagine that, at least over the next 6 to 12 months, these indices could easily all head higher. It's a classic melt-up scenario. We have all the right ingredients in place. Even more big stimulus is likely on the way before long. Unemployment and home prices are stubbornly high, while real interest rates remain firmly negative. But through all of this, precious metals, and silver in particular, look irresistibly cheap. And why is that? Because they're not subsidized by the Federal Reserve or the government or anything. One can make an argument that they're being squashed down by big banks, but there's really no evidence of that either. We do see manipulation, but a manipulation can occur on the way up as well on the way down. And why is that? Because in order for those to skirt law and do spoofing and manipulate the prices, they do it any way they can in order to profit from that activity. And that profit taking can occur on the way up as well as down. So why is it that prices are so cheap? Well, let's take a look here what the article continues about silver's macro environment. The author's got to say he can't blame investors for pushing asset prices higher. After all, the two Feds, the Federal Reserve and the federal government, are a determined bunch. It's easy to see why. Yeah, make no mistake, the stock market is propped up by liquidity from the Federal Reserve and the government, for sure. It's in their best interest. Some important relief programs expired this past summer, including a $600 top-up for unemployment benefits and a loan program for small businesses. The $1,200 stimulus checks are feeling like a distant memory. Another temporary aid will end this year. Meanwhile, small businesses are struggling. According to Opportunity Insights, there are 29% fewer open small businesses than in January and less than at any time since the month of May. And now there's a new revised lockdowns in many states where certain businesses are being shuttered and others are remaining open, or other industries and other things like that are going strong and remaining open, which makes no sense in some aspects. Unemployment is persistently high, particularly for those in the lower wage categories. November saw 245,000 jobs added to the U.S. economy versus 610,000 in October. Since the start of the pandemic, the U.S. has lost nearly 10 million jobs, a lot of those in the service industries. Right now, Congress is working on a bipartisan program which could include an extension to unemployment benefits, a possible second loan to small business stemming from the Paycheck Protection Program. So with the prospects of a lot more helicopter money ahead, Janet Yellen, as the next Treasury Secretary, must be dusting off her pilot's license. That's for sure. Not to mention there will be individual checks that could range in between $600 and $1,200 again. In the meantime, asset prices continue to soar as negative real rates abound. The S&P Case-Shiller U.S. National Home Price Index is 70% higher than it was in 2012. And real interest rates have been below 0% for most of the time since late 2007. The author expects these trends to remain entrenched and even continue as we move forward. So here are the bullish metrics that the author has laid out here. In his view, as far as investment assets go, silver still remains amongst the most undervalued, and that's likely or unlikely to last, he says. Let's look at it from a few perspectives. When compared to gold, the silver price has a lot of catching up to do. We can see from this chart that that is the case here. Peak silver, peak gold in 1980. Silver really skyrocketed up there, and then we see peak gold and peak silver here in 2011. Silver really skyrocketed there. That was essentially about a 33-to-1 gold to silver ratio in 2011. But this time, we've not seen silver make the same move upwards as in gold in here in 2020. But gold went to its all-time high. So it is understandable to say that that is undervalued. Notice that in both 1980 and 2011, silver's percentage gains were markedly higher than gold's, easily outpacing the yellow metal. And if you peer over to the right end of the chart, you can see silver clearly has a lot of catching up to do. On the inflation-adjusted basis, silver also looks dirt cheap. Note that when it topped out in 2011, even when accounting for the low-balled consumer CPI, silver never even achieved half of its adjusted 1980 peak. And right now, at $24, it's only 1/5 at those levels. More recently, silver peaked at $29 in August and has been on a 4-month correction since. And I wouldn't say correction, it just dropped. But the price has mainly held above $23 after testing that level 3 times. The 50-day moving average has been flattening out, and silver has just popped back above that level. At the same time, both the RSI and MACD have been trending higher since silver first test of $23 in late September. Looking at silver stocks, the overall picture is similar, if slightly less convincing. SIL has dipped lower to test the mid-July breakout at $40. And here too, the RSI is trending higher, but the MACD put in a slightly lower low in late November. Meanwhile, the 50-day average has also flattened out, and SIL is now challenging that level with room for momentum to push higher. So there it is. That's kind of what it's. He's talking about how this thing can play out with the paper markets as well too. But here's something that he's not really that he's missing here, I think, and it's something I've talked about on my channel that I've really not heard on many other silver or precious metal channels out there. I think a lot of the reason why silver has not performed as well as gold over the last 5 years and even into this cycle here is because silver has started to be seen more as a commodity, as an industrial metal than it has as gold, something that's treasured, something that is a hedge against economic instability, as money. Silver has those attributes and qualities to it, but they're not being recognized by the market. And I think that market, largely driven here by the SIL or by the ETFs, is where you're seeing a lot of this occur. And proof positive of that is what happened in March. Gold did go down in March, for sure. It dropped fairly substantially. But silver all but crashed. It went down to under $12 an ounce. The SIL, the SLV, and the electronic silver went down by that much. People wanted to run to the safety of cash. That's right. And I'm not talking about Johnny Cash. I'm talking about fiat currencies. That's right. The safety of cash is something to consider. And this is why I have a newly profound respect for the fiat currency that we use every day. Do not mistake that for what I've talked about in a previous video about how there's a difference between having faith in something that is a depreciating asset. in other words, recognizing it as something that is of value as money, as a currency, as a fiat currency, and knowing that it's having the faith in its value is a very different thing. But nonetheless, here the article continues to make this call to action. Silver's looking pretty bullish, is what they say. I do disagree with it, at least right now, in terms of the amount of bullishness they think there is. I'm going to talk a little bit about why I'm bullish on it, but not in the same way. He says we could see it chop back and forth for another week, maybe two, but with the next Fed meeting on December the 14th and 15th, the author thinks this setup is looking increasingly positive. If you don't own any silver, now looks to be a great time to layer in, buying in regular intervals over the next few weeks or month. In other words, he's not talking about months, he's talking about within the next month. If you already own some silver or silver stocks, but feel you need more, the same applies. Start buying, but split out your allocations into a few tranches. This will help smooth out your purchase cost. Now, that's the smart way to do it. You know, you don't want to go into debt buying silver. That's something that is I think is crucial for people to consider. You don't go all in on credit for something like this, because silver does not pay dividends. Consider all the assets out there. Silver looks amongst the cheapest by several metrics. That helps mitigate risk while diversifying your portfolio. But then he cautions, but his caution is really reckless. Silver is heading into a massive bull market. That doesn't sound very cautionary. That sounds like a reckless prediction. Large gains coupled with volatility lie ahead. Well, that's where the caution is. That's where the disclaimer is. Volatility. Silver is volatile. And that we can agree. But I don't think it's headed for a massive bull market. I predict maybe silver will see $30 in 2021. And I'm bullish in that regard. Sometime in 2021 we will see it. But I believe it will continue to be volatile. And essentially, it will, in the long run, when you average that out, it's going to go up some. But moving from 24, the low 24s to $30 is not a huge jump, especially considering we just saw 29 that long ago. But I think other factors are going to come into play. But I think part of why we should be bullish on silver is not necessarily based on what this article says. It's based off of that either way you look at it, no matter how you shake it down, an improved economy and more silver being utilized in an improved economy means that there's going to be more demand. Will the supply meet that demand? Likely it will, to an extent, but it's going to put some squeezes on supply to a point. Squeezes on supply does not mean necessarily that it's short on supply. It just means getting silver out there, kind of like what we saw in 2020, but maybe on a lesser scale if things improve after this pandemic is over, or at least greatly subsided based off of vaccine distribution and barring any large side effects from the vaccine, which I've already heard of one, Bell's palsy, which is very concerning to me. So I'd say be very careful with that and other factors. But see, the thing is, silver is essentially will do well if the economy goes downhill or we start to see a decline in the economy, because then people will move to the safety of precious metals, and silver will benefit from gold's rise and maybe outperform gold in that measure. Or it'll do well in an improved economy, and make no mistake, that's what we all want, no matter what the situation, no matter who's president or what have you. We want a better economy, and we want things to return to normal in terms of our economic situation, in terms of our life and our way of life. And we all want this COVID stuff to be over with, for sure. So, but nonetheless, I think there's reasons to be optimistic on silver. However, we should not break the bank in order to buy it. We should buy it in intervals, as the article suggests here, but also, keeping in mind our fiscal situation and being fiscally responsible as individuals. That's really the only way. And again, if you can't afford to buy much silver, well, be happy with what you have, because with what you've got, you are already ahead of the game compared to the vast majority of people in the world, much less here in the United States of America. So there you have it. I hope you enjoyed this video. Post your thoughts in the comment section below. We'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.